Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to production schedule and schedule of cash payments. Get ready, it's time to take your chance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheets on the right-hand side, including the production schedule and the cash payments schedule. We're going to be focusing in on the time period of March, April, and May. March, April, and May. However, we're going to be needing the information for February and June in part in order to focus in on the material we will need for the point that we're focusing in on March, April, May. So we have the expected sales for March, April, May, and June. Then we have the ending inventory equal to 2.5 times the expected sales in the following month. We have the materials cost per unit is going to be 8. And then we have the paid the month after the production. So we're going to pay for the materials. In other words, the month after the use or the purchase of the material after the production. Then the labor costs are going to be $11 per unit. And then those are going to be paid after the month incurred. Then we have the fixed overhead is $30,000. Dividends, we're going to be paying dividends this time in May of $20,000. Units produced in February are going to be $24,000. Okay, so we're going to start off with the production schedule because we're going to be needing the production schedule in order to think about the cash payments, because one of the primary components of the cash payments will be related to the production process, that being related to the material costs for it. So we'll start off with the production schedule, and we're going to be thinking about then the projected sales. So let's figure the projected sales because we're going to be needing them to think about some of the other components in the production schedule. So the sales we're going to be picking up at March, which is going to be the 22. April is going to be the 25,000. May is going to be the 23,500, and then June the 20,000. Then we're going to have the desired ending inventory. So we have ending inventory. The amount that we want to keep in the ending inventory says ending inventory is equal to 2.5 times the expected sales in the following month. So now our convention, and again, this convention could change from company to company, but you could see how we would want some type of standardized convention. We're saying, hey, I want you to take a look at the next month's sales and take 2.5 times of the following month. So we have this staggering kind of process that we're going to be needing a larger amount of inventory than normal than you would think for many types of businesses, but again, that could be the case, something that would be necessary depending on the industry that we're in. So that will change from industry to industry. Some industries will try to minimize the inventory as much as possible, and some industries will need to have more substantial inventories on hand. So let's go ahead and say this is going to be equal to the next period times 2.5, 2.5. I'm just going to say 2.5, and that's going to be our fixed amount that we can then copy forward. I can then autofill this forward because the 2.5 is going to be a fixed amount and it'll always move over the cell. So when I move this cell over, autofilling from February to March, then the amount here will be moved over from March to April. Let's check it out and see if that is indeed the case. No absolute references needed in order for this process to take place. Let's autofill across. I'm not going to go to June because I don't need to go to June. Our goal is here for March, April, and May. June number is only there to help us with any calculations if necessary. Then I'm going to underline this. So let's just underline the ones we need, these three. Then go to the Home tab, Font Group, and that's not the one I want, underline. And then that's going to give us the total units that are required. So that'll give us the units that are required. Let's sum this up. In March, April, and May, we're just summing up the 3 months that we're focusing in on. And we could even make these kind of red. I'll actually make these red. They'll be red on yours so that we can see the difference here, that those are kind of outside of our range. Note that I shouldn't have made May red. So on your worksheet, you'll have February, June, and February here on the following worksheet. June should be red. So just note it'll be red, and then I'll fix it a little bit later in the presentation. So don't let that throw you off. May should not be red. I'm going to autofill this across now, putting our cursor on the autofill handle, dragging that on across. So March, April, and May. Then we're going to be saying, well, we already have beginning inventory. So the beginning inventory that's going to be on the books will be then equal to the prior period's ending inventory. That's, of course, why we needed February here, because we got that staggered schedule. This is the desired ending inventory for February, therefore desired beginning inventory for March. And we can copy that across. So I could copy that across. If I copy this across, it's just simply going to move the cell. If I copy this from March to April, it's going to move the reference from February to March that we're copying from, which is what we want. So let's use the autofill feature to practice that. Autofilling across. So there we have it. And then this is picking up the prior month. This is picking up the prior month. That looks good. So let's pick up the units then that we are going to be producing. The units that we need to produce then are going to be equal to the units that are required, the 84.5 in the case of March, minus the beginning inventory, and that's going to give us the 29.5. We can copy that across, so we'll put our cursor on that cell, autofill, dragging over the autofill handle there, and double clicking on the last one just to check the formula. Formula looks correct. So let's go off of that. I'm going to then select these cells so we can underline them. Selecting these cells, go into the Home tab, Font Group, and Underline. We could select the cells below them and put the double underline here. Go into the Home tab, Font Group, drop down, then the double underline. Now we're going to go to the cash payments. So we got the units produced. We'll typically start off with the units produced because we're going to think about the cash payments related to the materials for them. So I'm going to pick this one across. Now the 24,000 were given to us down here in our data set because that's outside the range, but we will need that within our calculation set. And then the rest are going to be coming from the schedule we had up top, the 29.5. I'm going to copy that across or use the autofill to copy it across. Autofill through May. I'm going to bring this all the way out to May. And then we're going to have our payments. So the payments that we are going to be having, the cash payments, this is where our focus is for the materials. Let's pick up the materials. So it says then that the materials cost $8 per unit. So $8 per unit. And then it says down here, it should be kind of right below it. I should probably pull this up to here. But anyways, paid the month after the production. So this was paid the month after the production. So that means that the materials that were needed for February are going to be paid in March. So in other words, we got the materials in February, have it in accounts payable, are paying off the accounts payable then in the following one month, in this case, March. So we're then going to be taking the 24,000 times the $8. So there we have that. Notice in a prior presentation, we could have figured out basically the purchases, meaning we might have a line under here giving us the purchases, which would be 24 times the 8 in February that would then be paid in the following month in March. So this is just another format that we can use to do these calculations. So then I'm going to do that here. Now note what we have. I'm taking the prior month information. If I copy this over, I want to move this over from March to April. I want to move this over from February to March. When doing so, it will do so automatically. This number, however, I don't want it to move. Therefore, let's use an absolute reference for it. So I'll put my cursor in B13, selecting F4, putting a $sign before the B and the 13, making it an absolute reference. Then I'll hit enter. We'll put our cursor back on it. We should then be able to use the autofill, putting our cursor on the autofill handle, dragging that then across through May here, through May. And I shouldn't have made May red. Sorry about that. I'm going to unred May. That's in our zone. June. Next, we have the labor costs. So we're going to be picking up then the labor costs. And it says that the labor costs are going to be $11 per unit. So we're paying, we can break it down to a per unit cost, $11 per unit, paid month incurred. So it was paid in the month incurred. So we're going to be then saying that the labor are going to be paid for the same period that the cost was incurred. So the units produced were 29.5. This will be then equal to the 29.5 units times 11. Let's use our autofill once again, double clicking on this item. We want to move this over as we copy it across, which is naturally what Excel will do, but it will also move the 11, therefore, and we don't want it to do that. Therefore, we will put our cursor in B18, select F4 on the keyboard, putting a $sign before the B and the 18, making it an absolute reference. Hit enter, put our cursor back on that cell, use the autofill handle to click and drag, dragging that over through May. So then we have the fixed overhead, which is typically going to be a standardized process or pretty easy because fixed means that it's going to be fixed through the month. So we're typically just going to have a set amount, such as like rent is the common example that I would use most often for a fixed cost. So we're just going to say that will be equal to the 30,000. Note that a lot of expenses might be assumed to be somewhat fixed across the time period. So expenses, you might have a good deal of expenses that are pretty much stable across the time period or are assumed to be so. Note that we're not using an accrual basis, however, which would be more standardized. So we do want to break out any kind of differences with the cash flow statement than we would under a more smooth representation of an accrual basis system. So I want to copy this across. I can't do so because it'll move the cell. I want to make it then an absolute reference, double clicking on it, hitting F4 on the keyboard, putting the $ before the B and the 22, hitting enter, then going back on the cell using then our autofill feature to drag it on across. Now we have the dividends. Now remember what are the dividends once again? Those are going to be the cash payments that are going out of the company. They aren't on the income statement. They're not an expense, but they are a cash outflow for the company because they're paying some of the earnings that have been accumulated from the procedures or the process of the company. Income, net income that has been accumulated that has not been given out. Now we're giving it out. So it's going to be coming out of the retained earnings rather than, and will not be reflected on the income statement, but will still be a cash outflow. Now, this is something that won't happen, on a standardized process every month, most likely, but will happen periodically. So we're gonna process this when they say it was gonna happen, which was May, is gonna be the 20,000. And that's going to be it. So that's going to be our payment flow schedule. So we're going to have our total outflow in terms of the payments that we'll have down here. We're going to be summing this up in the period that we're focusing in on, March, April, and May, using the old sum function equals SUM, shift 9, up arrow once. Notice I'm going to pick up the blank cell here because I want to autofill it across. I'm not just going to, in other words, I'm not just going to add these 3 cells, but these 4 cells, even though one is blank, it'll come up with the same number, but adding 4 cells will allow us to then autofill it across, putting our cursor on the fill handle, dragging across. Now, of course, this last item will pick up the 20,000 where it would have not done so if we only selected 3 cells. Get in the practice of doing that, and just, good practices of setting up your Excel worksheets. Then we'll put an underline here. We'll go to the Home tab, Font Group. We'll put an underline here, and we'll put the double underline on this one down below. Home tab, Font Group, and the double underline. Notice some people may like and prefer to have, if there's nothing in these cells for the dividends, you might want to actually populate a 0, because that'll give you a number there. It will allow you to put the underline under the 0, and it'll allow you to then think about this cell reference as a sum of that blank cell. So many people don't really like having blank cells. It might be, and it'll also help you if you want to sort your table in different ways, but you might want to put a 0. So that's another option that you can put in there. You don't need a 0 for the formula to work, and whether you put a 0 in there or not, you want to be summing up the 4 columns so that you could standardize that summing process and be able to copy it across the table, and then you could do other projections using that number. But that's another option you have.